The Fed stimulus boosts fortunes of Wall Street, but Main Street is a long way from back. The Fed's ongoing stimulus efforts has a massive $3.7 trillion redistribution of wealth that has only benefited banks and financial firms, as well as the wealthiest 5% of the country that hold real assets such as stocks and real estate. They're the ones benefiting, not Main Street. We are currently questioning the merits of the so-called QE at the time when the Fed's $85 billion a month or $1 trillion annually bond buying program is about to sunset. PIMCO's Bill Gross, for example, is also making headlines by challenging the fairness of the country's tax system, which he says unfairly favors billionaires like himself. In a recent note, that Clients Gross wrote that the era of taxing capitals at lower rates than labor should end. If you're a privileged 1%, you should be padding right alongside and willing to support higher taxes and carry interest, and certainly capital gains readjusted to existing marginal income tax rates. Remember that the outrage of the masses over Wall Street corruption gone. The Occupy Wall Street crowd has been bought, paid for, and neutered. Quelling of the riots masses didn't require a lot of gas, attack dogs. Big media isn't working with corporate overlords or politicians to mask the existence of angry masses beating down the doors of JP Morgan or SAC Capital Advisors as they finalize the terms of their respective settlements. When it comes to anger towards Wall Street, there isn't a story to cover. The truth is Main Street doesn't really care much about the dark relationship between Washington, D.C. and the big banks anymore. And this is where we're at these days, sadly.